Hello and welcome to Chart of the Day Cafe for Tuesday, March 22nd, 2016. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. And sad news this morning out of Brussels. The futures are off because of some explosions at the Brussels airport and some subway stations. So thoughts going out to the people in Brussels right now. That sounds really terrible. So we always start our videos off with a look at the IWM, which is the ETF that represents the Russell 2000. We're looking at it on a 5-year monthly time frame, paying particular attention to the blue channel. And we were talking last week, this is the candle that's shaping up so far for the month of March. Bullish candle so far. Note February, the long wick and the thrust that wanted to push price up and back into this channel. So we're at an interesting area. To me, it looks a little do or die here in terms of will the market start to roll over here and resume that downtrend, or will we break through these areas? So if you can bear with me a little bit, I'm going to take a look at some other big charts this morning just to get that perspective. So starting with the Russell, we can see where we are on the Russell so far for the month of March, fairly bullish candle. Having said that, futures are off this morning, so we'll see how the rest of the week goes. The other one is the Dow. Again, we're at this area of resistance right here, right now. But having said that, fairly bullish candle for the month of February, and so far for the month of March, I would say the same thing. SPY, a lot like the Dow, although not quite at those levels yet, but that thrust in the candle for March and so far for the month of, February, so far for the month of March, a fairly bullish candle as well. So those are the big indexes. Let's take a look at some of the individual sectors like materials. That's strength. This is XLI, IYT, the transports, breaking out of my channel, showing strength. And we've been keeping an eye on technology. Technology is lagging a little bit here, so there are a couple of sectors when I look around at my charts. If the market is going to move higher, healthcare and technology look ripe for moves to me when I look around at individual names. So I'm just putting it out there. If the market does resume the uptrend, I will be looking to those two sectors specifically. So those are the big charts for the U.S. to get perspective in the U.S. But let's just take a look at some country ETFs like China. Every once in a while at Chart of the Day Cafe, we show this chart. It's FXI, which is the large industrial big caps in China. So this is the monthly chart. We've noted in the past the blue channel that it would trade it in, and then it had this parabolic move up and out in the latter part of 2014 and into 2015. The subsequent sell-off, but here's the doji from February and so far for the month of March, looking pretty strong. So China needs to be considered in your thinking in terms of where we are right now. Would suggest to me to answer the questions, is global growth enough to keep the charts going higher? Have central banks provided enough liquidity and impetus for charts to move higher? Those are the two questions I'm asking when I look at all of these charts. So that's China. The other ones I wanted to show you, Japan, EWG, area of resistance right here. So that's worth noting. And EWG, which is my proxy for Europe. It's the strongest economy in Europe, so I refer to this one quite a bit for myself. This is Germany. So you can see it traded out of this great big wedge, this big long-term 10-year wedge. And we are now at that area. We're kissing the underside of the trend line for Germany. So I will look to this chart in the days and weeks to come to see how Germany behaves to Mario Draghi's central bank stimulus, and is it enough to get things going up and out. The other one that we've been taking a look at, let's take a look at Canada. EWC wedge month of February that provided the wind for the month of March, which is the candle so far for the month of March. So again, 10-year monthly chart at this area of support, and so far so good. And EWA at support and lifting. So let's quickly, the charts that are at support and lifting, China, at support and lifting. I forgot to include India. I wanted to include India in there as well because they're a big kahuna. I would consider China and India the big ones. INDA, the ETF that represents China, or sorry, India in this great big wedge, lifting off support. Canada, lifting off support in response to those consuming countries, China and India. Australia and Canada are lifting off support. So I think that's worth keeping in your thinking. The ones that are at resistance, North America, the Dow, the S&P, IWM. As we well know, this lower blue band is an area of resistance. And then the charts that we were covering last week that I think are really important to keep an eye on, TLT, the bond, long bond, TLT. So here is the weekly chart trading in this big wedge last week. Would suggest that it wants to break out and go higher, which supports the case that the markets will sell off here and start to reverse. So I'm keeping an eye on this one, as well as we talked about last week, UUP, the dollar, the US dollar. If it starts to get traction here and strength, that may lend some complications to global markets. So we're keeping an eye on the US dollar. And volatility. So the VIX. This is the 9-month weekly chart of the VIX. You can see these beautiful waves up and down, and we're getting into an area right here, where we are right here, right now, in this great big wedge where the VIX will either break out and the markets may sell off, or it'll quieten down and push further into this area here. So far this morning, the VIX is up, bonds are up, the US dollar is up, the markets are soft, so we will want to see follow through and which direction everything wants to go in the days ahead. Should market strength continue, so let's go back to the Russell chart. I'm going to put it on a weekly time frame. The IWM, so remember we have this gap to fill on the IWM. We put this circle here last week. Having said that, the candles for the last 3 weeks look pretty strong. This is the candle so far for the week we're in. It's only Tuesday. So if we do get that continued strength, charts that I would refer to, Chart of the Day Cafe picks full of value and growth. The first one is Netease, which is an internet service provider in China. Broke out of this wedge, sitting at this area of support. If it stays up and over the blue 8-day EMA, this one is a really nice one. So I'm pointing it out to you just because we're at an area where if it does start to lift, it's got a nice risk-reward. You can really tighten up your risk-reward. Get on board with this one. Never making any recommendations whatsoever, but Netease looks good here. The value score on it is 1.83. That is super, super high. So this is a great growth value pick. The other one I wanted to point out is AMBA. This one is basing and bottoming, but it is a beautiful, the technology behind this company is amazing. I really follow this one closely. I love it. You can go back and look at the Chart of the Day Cafe video that we did for AMBA. It was quite a while ago, but it will help you understand this company. The value score on it is 1.54. In a rising market, should strength come back into this market, I would look for AMBA to start to lift here. This one does not pay a dividend, having said that. Netease does pay a dividend. And the other one I'm keeping a close eye on is ICE Intercontinental Exchange in the financial sector, a past Chart of the Day Cafe pick. Like the CME, the ICE Intercontinental Exchange offers, it's trading floor for futures and commodities. It's at this area of resistance, but it's showing me strength here. And in a rising market, I would expect it to bust through and resume the uptrend. This one pays a dividend and has a nice high value score of 1.46. The next one is Disney. We've been pointing Disney out in our videos lately. Should the market have a strong day in the next couple of days, Disney should resume this uptrend here. A high value score of 1.45 and a dividend. And the next one, the last one, is eBay. We've been keeping an eye on eBay. I think eBay looks terrific here. Should it stay up and over the 8-day EMA? Again, high value score. eBay does not pay a dividend. So those are the ones I'm keeping an eye on. In the healthcare sector, a past chart of the day cafe pick, and currently in our model portfolio is Gilead. No, there we go. So healthcare sector, this sector looks particularly strong to me in terms of looking around at individual charts, looking to resume their trend forward. Again, Gilead is a past chart of the day cafe pick and looks good here. So with that, I will leave you, and we will put out a video again on Thursday. Good luck in the days ahead. Thanks, guys.